warm welcome. You've joined us on Commodity Central right here on ET Now. I'm Ashesha Advaryu, and on the show today we will put the spotlight on India's sugar industry, and there have been a lot of updates overnight, especially when it comes to exports. We'll discuss all that and more in just a bit, but first up, the top headlines. Oil rises after its first decline in almost a week as Iran steps up attacks on energy infrastructure around the Persian Gulf. Operations were suspended at the Shah field in the United Arab Emirates, while an Iraqi oil field and key Emirati airport was also targeted by Iranian drones and missiles. Gold trades in a narrow range as traders weigh inflationary risks against attempts to contain an oil supply shock arising from the war in West Asia. Wheat futures in the United States jump after a survey reinforced concerns around the status of the winter crop on the southern plains, with large parts of the region struggling through a drought. Shipping insurance costs to cross the Strait of Hormuz soar after ship attacks. Cost of coverage has leaped to about 5% of the value of a ship, roughly 5 times the level that we had seen in the early days of Israel-Iran war. Back home, sugar sector is in focus after the Food Ministry approved an additional export quota of 87,590 tons of sugar for the current sugar season. In February this year, Government of India had allowed an additional 5 lakh tons of exports, but out of 5 lakh tons of additional allocation, only 87,587 tons were requested and has now been approved by the government. Those are all the top headlines that we are tracking from the world of commodities. But first up, let's take a look at precious metals basket then. Gold has snapped its 4-day gaining streak in today's trading session. Currently, it is trading at $5,000 an ounce mark. It is up 0.4% today, but it ended 0.3% lower in yesterday's trading session. Silver, meanwhile, it is trading at $81.2 an ounce. It is up 0.5% today, and it ended 0.2% higher in trade yesterday as well. As far as the factors are concerned, remember, prices of fuel continue to remain on the higher side, which is expected to result into higher inflation in the global market, which could consequently result into longer rate cuts, and pressure on gold and silver as a consequence of this is likely to persist for some more time going forward. And that is the reason, despite conflict in West Asia, we have seen some bit of pressure come in not only for gold but also for silver market, especially after the kind of run-up that we saw in calendar year 2025. Meanwhile, let's also shift focus to the oil market then. Brent crude is now trading at $104 per barrel. It is up 3.6% in trade today, but it ended 2.8% lower in yesterday's trading session. Iran has now gone ahead and stepped up attacks on energy infrastructure around the Persian Gulf, and that continues to weigh heavy on global oil market. And that is precisely the reason, yes, oil has cooled off a tad bit from $109 that we had seen at the start of the war, but now it continues to sustain above $100 a barrel. But shifting focus to India's sugar industry then, and as promised, there have been a lot of developments, and to take that conversation forward, we are now joined by Mr. Atul Chaturvedi, Executive Chairperson of Sri Renuka Sugars. Mr. Chaturvedi, afternoon. Thank you so much for taking your time out and joining us here on ET Now. Ashesha this side. The government had allowed an additional allocation of 5 lakh tons for export in the current sugar season. But I believe out of that, application were made only for 87,000 tons. Is it true, and what led to this? Is it because of lower international sugar prices, or is demand a concern in the international market?
No, if you really look at the whole scenario, government had initially allowed 15 lakh tons of export of sugar. But against that, only about 3 lakh or closer to that figure has actually been achieved till February end, which means from October through to. So it simply shows that the international demand for sugar has not been all that great. And with the geopolitical problems everywhere, the supply chains have been terribly disturbed. So overall, the scenario is such that to find a home for Indian sugar in the international market at competitive prices is going to be a challenge. So when the government actually announced additional quota of 5 lakh tons, they put so many conditions. Obviously, with so many conditions, only when the people who are very, very brave would have ventured to take that quota. But effectively speaking, as against 15 plus 5 lakh, 20 lakh, now the quota has been reduced actually to 15.87 million tons. So effectively, it is not an increase in quota, but it is actually decrease in the overall export quota. So that is the scenario.
Right, so it is definitely not a positive. But since we are talking about prices and because international prices are a concern for the sugar sector, if you can quantify that for us, where do international sugar prices stand currently in contrast to domestic prices, and why does it make sense for sugar mills to sell in the domestic market over exporting? What is the logic and what is the rationale?
As of today, in the international market, the values are closer to about $415. Even if we assume an exchange rate of about 92.5 or thereabouts, the realization on a FOB basis, which means ex-Kandla or export, would be only about 38,000 rupees or thereabouts. And if you minus out the shipping expenses, which are closer to about 3,000 rupees, effectively, the mills would actually realize only about 35,000 rupees per or 35 rupees a kilo, which is way below the domestic values. Domestically, sugar is currently selling at closer to about 38 rupees in Maharashtra, Karnataka, and about 40 plus in UP. So I think that doesn't enthuse the industry to aggressively go for exports. And that's the reason why you see, even in this 87,000, which the government has allocated, only largely it has been Maharashtra and Karnataka mills who have applied. And that too, no one from UP has come. And obviously, they would have had some commitments given in the past or whatever. And that is the reason which they are probably going to be exporting. But it's not something which is very exciting to the industry.
Right, so that's as far as exports and pricing is concerned. But Mr. Chaturvedi also wanted your thoughts on production estimates for this year. ISMA has gone ahead and lowered their estimates, saying that the yield and sugarcane availability in Maharashtra, Uttar Pradesh and Karnataka is likely to be lower than earlier anticipated. What are your thoughts on availability and manufacturing of sugar in the current sugar season? And then we'll talk about the next sugar season as well.
No, it's right that the ISMA, after initially giving a very high production estimate way back in September or early October, have revised it downwards. In fact, most of the mills in both Karnataka and Maharashtra are closed. And even in UP, the mills are actually gasping for breath. As per the figures which have recently been released by NCCF, they say that by 15th of March, 26.1 million ton of sugar has been produced. So our take is, and I would much rather go closer to what ISTA has been saying, but ISTA had the advantage of giving their number towards the end of January, by which time things had become much more clearer. So ISTA number is closer to about 28.25 or 28.3. So my take is that our production this year is going to be around that, plus another 3.1 or 3.2 million tons of diversion towards ethanol. So obviously we've had untimely rains or too much rains, and the yield actually got affected big time in Maharashtra and Karnataka because of early flowering. So early flowering ensures that the production stops after that. So that now I think the season is practically over. It would be safe to take a number of about 28.25 or 28.5 as the crop number this year.
Right, so that's
Yep.
as far as exports are concerned, but also wanted your thoughts on ethanol. At a time when global oil supply is a concern, countries globally, including India, are increasing their focus on ethanol manufacturing, isn't it? At a time like this, do you expect the government to go ahead and perhaps give a further push to ethanol manufacturing in India? And could that aid ethanol prices, which has been a concern for the entire sugar industry?
The industry has been crying hoarse for almost 6, 8 months that there is no reason why sugar sector should be treated like a pariah, and only ethanol from maize being purchased at 72, and from sugar being purchased at 65 and 60 rupees. So I think this is a wake-up call as far as the government is concerned, and it is important that they jack up the prices of ethanol and also ensure that the total 20% blending ratio needs to be jacked up. Otherwise, it will not make much sense. And I would also go to the extent of saying that there's no reason why India should not be introducing flex fuel cars. And flex fuel cars have been running in Brazil for almost God knows how many years. And there the blending ratio is closer to about 50%. And India's, I do not know why it is hung up at 20, maybe some influencer or WhatsApp messages on the social media would have probably resulted in this decision being deferred. So I think it's high time the India bites the bullet and ups the blending ratio.
Perhaps the government is also working on doing that, and that will perhaps fructify going forward as we speak. But Mr. Chaturvedi, thank you so much for taking your time out and joining